A family loses their home to a fire. The damage? $200,000. But their insurance only pays $120,000. Why? Because of one clause they didn't understand when they signed their policy. In the next 10 minutes, I'll reveal 7 clauses hidden in home insurance policies that most people ignore, but could save or cost you thousands. By the end, you'll know exactly what to look for in your own policy. Let's dive in. Welcome back. Last video, we broke down car insurance. Today, we're tackling home insurance, one of your biggest financial protections that most people completely misunderstand. This channel makes insurance simple. No sales pitch. Just clear breakdowns to help you save money and avoid disasters. If you haven't subscribed yet, do it now. You'll learn something that could literally save your financial future. Before we get to the 7 clauses, let's cover the basics, because most people sign their policy without understanding what they're actually buying. Home insurance is built on 4 main pillars. First, dwelling coverage. This rebuilds the physical structure of your home, the walls, roof, foundation, built-in appliances. If your house burns down, this is what pays to reconstruct it. Second, personal property coverage. This replaces everything inside your home. Your furniture, clothes, electronics, kitchen stuff. Basically, if you turned your house upside down and shook it, whatever falls out is covered here. Third, liability protection. Someone slips on your icy driveway and breaks their leg? This covers their medical bills and protects you from lawsuits. It also covers damage you accidentally cause to other people's property. And fourth, additional living expenses. If your home becomes unlivable, fire, flood, whatever, this pays for hotels, restaurant meals, and other costs while repairs happen. Sounds straightforward, right? Here's the problem: the devil is in the clauses. Small print that can make or break your coverage. Let's get to them. Clause number 1, replacement cost versus actual cash value. This is huge. Replacement cost pays to rebuild or replace at today's prices. Actual cash value pays what your stuff was worth after depreciation. Example, your 10-year-old roof gets destroyed. Replacement cost pays for a brand new roof, $20,000. Actual cash value? Maybe $8,000, because your old roof was already worn out. Always choose replacement cost. It costs a bit more in premiums, but it's the difference between rebuilding your life and going into debt. Guaranteed replacement cost means that even if rebuilding your home costs more than your coverage limit, the insurance company still pays for it. The full amount. No questions asked. Why does this matter? Because construction costs spike after disasters. When a hurricane destroys an entire region, suddenly every contractor is booked solid for months. Materials get scarce. Prices double or even triple. Let's say you have $200,000 in coverage. But after a major disaster, rebuilding actually costs $300,000 because of the spike in demand. Without guaranteed replacement cost, you're on the hook for that $100,000 gap. With it, the insurer covers the full $300,000. Not every insurance company offers this. But if yours does, get it. It's one of the most valuable clauses you can have. Clause number 3, water damage exclusions. Here's where people get burned. Standard home insurance policies cover sudden water damage, like a burst pipe in your basement, but they don't cover gradual leaks or flooding. That water stain slowly spreading across your ceiling? Not covered. Your basement floods because of heavy rain? Not covered either. Flood damage requires a completely separate flood insurance policy. And sewer backup? That's often excluded unless you specifically add it as an endorsement. Here's what you need to do: read your policy's water damage section word by word. If you're in a low-lying area, add sewer backup coverage, it's usually cheap. And if you're anywhere near a flood zone, get flood insurance through FEMA or a private insurer. Ignoring this one clause has financially destroyed thousands of families. Don't let it happen to you. Clause number 4, ordinance or law coverage. Imagine this scenario. Your house was built back in 1975. It gets destroyed in a fire. Now you need to rebuild. But here's the problem: today's building codes are completely different. Modern codes require updated electrical systems, new plumbing standards, different foundation specs, energy-efficient windows, the list goes on. Your standard home insurance policy? It only covers rebuilding your house to the old 1975 specifications. All those mandatory code upgrades? That money comes straight out of your pocket. We're talking $50,000 to $100,000 in unexpected costs, sometimes more. This is where ordinance or law coverage saves you. It pays for those mandatory upgrades when you rebuild. And here's the good news, adding this coverage usually only costs $50 to $100 per year. $50 a year to protect against a $100,000 surprise? That's a no-brainer. Clause number 5, personal property coverage limits. Let's talk about your stuff. Your home insurance might say it covers up to $100,000 in personal property. Sounds good, right? But here's the catch, there are sublimits for specific categories. Jewelry? Most policies cap it at just $1,000 to $2,000 total, for all your jewelry combined. Electronics and computers? Usually around $5,000. Cash in your home? Often limited to just $200. So if you have a $10,000 engagement ring, or expensive camera equipment, or a collection of watches, you're massively underinsured with standard coverage. The solution is called scheduled personal property coverage. You itemize your high-value items, get them appraised, and add them specifically to your policy. Take photos of everything valuable. Keep receipts. Get professional appraisals for jewelry and art. Then talk to your insurer about scheduling those items. It costs a bit more, but if something happens, you'll actually be covered for what things are worth. Clause number 6, loss of use, also called additional living expenses. Your house becomes unlivable after a disaster. Fire, severe water damage, whatever. Where are you going to stay? A hotel? An Airbnb rental? For how long? This is what loss of use coverage is for. It pays for temporary housing, restaurant meals because you can't cook, storage for your belongings, even pet boarding, all the extra costs while your home is being repaired. But here's what most people don't realize, this coverage has limits. Usually a time limit, 6 months or 12 months, and a dollar cap, often 20% of your dwelling coverage. If rebuilding takes longer than expected, or if you live in an expensive area where hotels and rentals cost a fortune, you could run out of coverage and start paying thousands per month out of your own pocket. Check your policy right now. If you have a large family, or if you live somewhere with high rental costs, consider increasing your loss of use limits. It's one of the cheaper coverage increases, but it can save you from financial disaster when you're already dealing with losing your home. Clause number 7, inflation guard, also called annual increase clause. Here's a silent killer that catches people off guard. You bought your home insurance policy 5 years ago with $200,000 in dwelling coverage. You haven't thought about it since. But construction costs don't stand still. Over the past 5 years, building materials and labor have gone up 20 to 30% in many areas. So your $200,000 in coverage? It's not enough anymore. You've become underinsured without even realizing it. If your house is destroyed today, you'll have a massive gap between what insurance pays and what rebuilding actually costs. You could be $50,000 or $60,000 short. This is where an inflation guard clause protects you. It automatically increases your coverage by a small percentage every year, usually 3 to 5%, to keep pace with rising construction costs. It happens automatically. You don't have to think about it. Your premium goes up slightly each year, but so does your protection. Most insurers offer this. Make sure you have it. It costs almost nothing and ensures you're never dangerously underinsured. Okay, you now know the 7 clauses. Here's what you need to do right now. Pull out your home insurance policy. Check if you have replacement cost or actual cash value. Look for guaranteed replacement cost. Review all water damage exclusions. Confirm you have ordinance or law coverage. List your valuables and add scheduled coverage. Check your loss of use limits. And verify you have inflation guard. This takes 20 minutes. Do it today. It could literally save your financial life. You just learned 7 clauses that can save or cost you tens of thousands: replacement cost, guaranteed replacement, water exclusions, ordnance coverage, property limits, loss of use, and inflation guard. Don't wait for disaster to figure this out. If this helped, hit like and subscribe. Next, health insurance decoded. Thanks for watching. Protect yourself.